Hello everybody, welcome to take 2 on the homework problem. Apparently the correct problem to do was problem 10-12A. Laverne purchased a new piece of equipment to be used in its new facility. The $420,000 piece of equipment was purchased with a $63,000 down payment and with cash received through issuance of $357,000 at 7% for a 5-year mortgage payable issued on January 1st of 2017. The terms provide for annual installment payments of $87,069 on December 31st. So I have our spreadsheet set up here. It has basically the same thing that is listed here, just the annual interest rate, cash payment, interest expense, reduction of principal, and the principal balance. Okay, so our equipment was $420,000. We put down a $63,000 down payment. So the principal balance, the amount we're trying to pay out, is $357,000. Okay, our payment every year is $87,069. I have a habit of inverting numbers, and so I copy paste whenever I possibly can. So we're going to pay $87,069 each year. Our interest expense is, we're going to figure out what the cost of the interest is. At 7%, we're going to take the balance on the account times 7%, 0.07. So this first year, the interest expense is $24,990. Next, we want to figure out what the reduction of principal is. Now, to figure that out, we're going to take our cash payment, the amount that we paid, minus the amount of interest that we were charged, and that will give us our amounts. So, our reduction of principal was $62,079. Now we need to figure out what our principal balance is for the first year. So we're going to take our principal balance from last year. It might help if I put an equal sign in. Principal balance from last year minus the reduction, the amount that we reduced it. So our new balance on our account is $294,921. All we need to do now, since we have our formulas set up, is just carry our formulas down. And there's our answer. Easy peasy. Hope this was helpful. If you have any questions, let me know. Thanks. Have a great day.